So good evening to all our mentorship traders. We are in our Friday evening session, the very first day of new year, 1st of Jan 2021, 9 p.m. Indian Standard Time. We are in our mentorship invest meet. But before that, we would like to take a look at the behavior of the market, how it behaved over the last week, and what can we expect going forward. And post that, we will discuss about investments, medium to long-term sectors, charts which are looking decent, and anything to do with not trading but investments. So I have the Nifty daily chart, the Nifty futures, the month futures daily chart in front of me. I'm using the Trading View platform here, and impressive move. We had a really sharp sell-off, just a 1 day. Just to make the bears feel a little, okay, this is it, and then, okay, this is not it. It was just a 1 day sell-off sharp, which was on the 21st of December, after which the markets just managed to bounce back one way for 8 consecutive positive session. Today's open was strong. I'll show it to you later when we go down to the 75-minute time frame. But the index is just not willing to come down, or on the other way, it's just too much a buying force which is keeping the prices higher and higher. Of course, there is a distinct divergence which is shaping up between price and various types of price momentum divergences you will face with no matter most of the momentum indicators which you plot will show this kind of divergence. These divergences are signs of consolidations, maybe corrections, but markets have not paid any importance to them at all. Strong uptrend. The weekly charts, as we always first look at the higher time frames, have managed a huge big breakout outside these channels, and they've never looked back. So this is a sign of a strong breakout. It never actually looked back. So talking from a longer term perspective, really long term perspective, this is a huge breakout. 14K probably would be very less of a level considering the long term targets that may come out from this huge breakout that we have. The daily, I showed this rising channel that we have. This rising channel is also very much evident over here. If you look at the 75-minute time frame, it's hovering very close to this upper border of the rising channel. And in this kind of a lower time frame, also you would start to see divergences shaping up, which can slow down the index if at all. But haven't seen any signs of that. So strategically, it's not a very prudent thing to look for shorting opportunities or go bearish. As long as the index is showing the strength that it is showing, it's always better to stay with the trend rather than to look for contrarian opportunities. So I wouldn't suggest you to go short. Strategically, stay cautiously bullish. That's been the stance for some time now. And we would rather look to buy on a dip than to chase any breakout from here for a short-term to medium-term trade. Now I managed to renew the old subscription that I have of stock charts. They had made some changes to their plans. So I've recreated the list again, and I will be able to now show you the RRG charts which we used to, and I will take up the Nifty here. So let's first look at the behavior of the sectors on the basis of just 1 week's performance. So this is 1 week performance. We're looking at the table here, and we've got the PSU banks, which has performed the best, followed by real estate, small cap, metal, auto, mid caps, financial services, and so on and so forth towards the end. So essentially, we have all these sectors performing this week. No complaints, and across all the tails, be it the leading sectors, be it the weakening sectors, the improving or the lagging. When we sort them in terms of percentage gains, it's all over the place. So it's a broad-based rally. It's a market which is showing strength across all the sectors. However, let's just look at the behavior of prices over the last 2 months, 8 weeks. Okay, and as we see here, and if we sort them in terms of 8 weeks of tails, we do see some weakness from lagging, especially from an index which is CNX Energy. This is primarily because of Reliance Industries. Then we have pharma also, which is trying its best, but it's not doing as good as the others. If you look at the tail, it's all primarily banks, private banks, Bank Nifty, metal, real estate, mid-cap, commodities. So the risk on trades, the economy, the markets are far more comfortable in taking a larger bet or a larger risk, as if you may call it. And these are the sectors which are in a leading quadrant, and so should be looked as opportunities to be bought on a dip, especially this pocket. The pocket which is improving is the public sector stocks, few FMCG. So we'll be keeping a look at ITC and Hindustan Unilever and Dabur here. PSU banks primarily would like to take a look at State Bank of India. This would be very, very interesting. And consumer durables also is picking up. So between this improving space, if I may draw a little bit of your attention, then I would say that FMCG and consumer, this is something would be really interesting to keep a close watch for the next few weeks and going forward, because these two, if I increase the tail of it by a little more, let's go to 20 weeks, okay. And if we look at how the consumer has been improving from the lagging to improving, and the FMCG also has been improving fairly well. And exactly during this time, the Bank Nifty has moved from improving to leading. The private has done the same thing. I think the PSU bank, let me check. Okay, is on the verge. So private sectors can slow down. PSU, maybe something like a SBI or a Bank Baroda may start to improve a little bit more, but I seriously doubt. But what I'm closely watching at is FMCG and consumer durables. They have now gone inside the improving. So generally what happens are essentially either of the two will happen. That is, if they actually continue to show strength, they will move on from improving to leading, or they may slip to lagging and improving and then leading, or keep on doing some roller coaster moves and then. So eventually they are going to move to leading, means eventually FMCG and consumer durables are going to pick up. It's just about time. That's exactly where the charts will come into play, and we'll be keeping a close eye on it. IT is weakening. Small cap, anyways, it's got 100 stocks, and so very difficult to take a call right now. But IT is one which is slowing down for quite few weeks now. Now remember something, this is momentum slowdown. This is not relative strength slowdown. The relative strength is still intact, which means this is a good sector to be bought on a dip. If we get a dip and if stocks bounce back, then from weakening it's going to bounce back to leading, and it's going to stay like that until it comes back to lagging. So this shift of IT coming down, FMCG and consumer durables picking up would be really, really interesting to keep a close watch. And the rest, the risk-ons, which is the private banks, Bank Nifty, metals, I think will continue to yo-yo, will continue to move up and down with the overall flow of the market. Now, let's quickly take a look at the sectoral charts at a go. I have the trend indicator using this line here, which the greenish zone is a strong bull market. This is a flattish market, and of course the red zone is a bear market. I have a short-term momentum indicator with RSI 3 and RSI 9. The first chart over here is that of the daily Bank Nifty. We can see the divergences shaping up with the RSI and the price. And if you notice, today, which is the 1st of Jan, it has created an inside bar. So it's definitely slowing down. So this can slow down the markets a little bit for the rest of the next week coming ahead. CNX Auto, on the other hand, is in a strong uptrend. Trend is intact. No signs of such divergences over here. It's yet to make a higher high, higher high, take out this high. Strong trend, so I think it will continue to do good. Commodity, on the other hand, is back to its previous highs again. Similar story like the auto that we had above, but we can see a clear-cut shift of the values of RSI 9 over here. On this bounce back, the last bounce back that we have here from 3558 to 3827, the previous high is 3868. It's almost just 40 odd points, just 1% of its highs. But RSI 9 over here is significantly off its previous highs. So this is creating a situation where the momentum price divergence is shaping up. Consumer durables, which we were just looking at, can show some strength. It's making a fresh high now with strong momentum. Divergences here as well, like most of the sectors and the index. To be bought onto a dip, definitely let it come down, and one should look to buy on a dip. Energy, now this is bogged down by primarily Reliance, the underperformance that Reliance has shown. It's not very close to its previous high, it's just midway. So I think energy is also created an inside bar, and it will be a make or break, as in a break below this week's low and break above this week's high will definitely decide upon the immediate direction. Pattern traders can call this a short-term pennant in the making. So we'll be carefully watching for a breakout from the energy, and so of course a look at Reliance. Financial services, strong uptrend. I think we should get similar divergences. It's divergences all over the place. Either they will all work or they will all fail. FMCG, now this is what we were talking about. It's just hovering at its previous high. It's range bound for the last 6 to 7 days, a breakout in the make. But if the breakout comes, it's worth taking a trade on it. And even if it doesn't come and if it slips down, I think still FMCG and consumer would be interesting to look to be bought on a dip. Infra flat, breakout candidate on the upside, divergence here as well. IT, now this is this sector is not willing to come down. It's in a very strong uptrend, but we saw that the RRG charts are suggesting that it's slipping slowly. The rate at which it's going up is slipping. So we'd keep a close watch on any signs of topping out from the IT. Media is primarily Z and PVR, so not much to talk about there. Moving forward to the next page, where we have metals back to its previous high, 328485 kind of levels. I think divergence is very, very evident here as well. So as we see, there are quite a few divergences in almost all the sectoral charts here. And so the markets, if they come down, definitely these divergences will play out, if at all. I seriously have my doubts considering the strength of the market. But if it comes down, don't go for that divergence or this divergence. I would rather say go straight for Bank Nifty, because that's the space I think can drag the market down faster. Rest of the sector seems to be all right. This is the PSU banks, which is a late mover, very, very late mover, no way close to its life highs, is bouncing back. And I think State Bank of India would be interesting to keep a close watch. Real estate, on the other hand, had a great run. It is holding exceptionally well to be bought on a dip, strong uptrend, 1334 zone that we have here. Next time, if it comes down, I think one should look to get into long trades. So overall, I think we can wrap up our call on the sectors and the Nifty by saying that we are definitely in a strong uptrend. There is, enough evidence that the bulls are definitely in charge. Divergences recently have failed. Sharp sell-offs have led to equally sharp bounce backs. But I think I would continue to say that let's be a little cautious. I know that the markets have moved up significantly from the time that we've been cautious, but what can we say? That's the kind of trend that we are in. More comfortable to buy on a dip. Those dips are even a 1-day dip or a 2-3 day dip is fair enough, but more comfortable to get on back or take up a larger quantity on a dip. So 14K has been taken care of. We'll see whether it holds or not next week. Any sign of a break of previous day's low or 2-3 day low, which is for the index close to 13,900 can lead to a short-term 100 to 150 points drop. There's enough divergences across sectors, sectoral charts, which just does support that maybe the markets can come down, but we should not definitely doubt the strength of the underlying trend. So let's stay cautiously bullish and see how the market plays out next week. So that's all for the discussion on the index and the sectors. Let's now move ahead and discuss about our mentorship invest.